This is Beyond the Resume, the podcast that brings you the stories, advice, and insights behind some of the most successful people in real estate. Beyond the Resume is brought to you by Jackson Lucas Executive Search, the industry leader in human capital solutions. Here is Chris Papa and Lisa Flicker.
All right, Alex Viorst, thank
Hello.
you for coming to the podcast. How are you?
I'm great today. How about yourself?
Good. So you are the executive director at PGIM Real Estate, where you're doing direct to loan originations for the Mid-Atlantic and Northeast regions, I believe. Can you just describe sort of, well, I guess I feel like most people know what PGIM is, but just I'm sure some don't. Like, describe PGIM and your role there.
Certainly. PGIM is affiliated with, it's a subsidiary of Prudential. I think I have that right, but it's part of Prudential. It's the debt and equity platform. Prudential does lots of different things, but within PGIM, we do debt and equity. Historically, as a large insurance company, Prudential was in the lending business and asset management business and servicing, and then over the years, we have added a Fannie, a Freddie, an FHA license. We do balance sheet lending. But yeah, that's sort of the quick history. And then PGIM is the company that does the debt and the equity. And I am an affordable housing loan originator. That's really all I've ever done. I've been in this space for 31 years. I started in the early 90s at LaSalle National Bank as a construction-to-perm lender, which nobody does anymore. Balance sheet construction to 30-year perm loans. Nobody does that anymore. But I love the affordable housing space. And as I stayed in the space, the industry has evolved and I'd say grown up and gotten much more complicated. And you tend to either do, construction lending or equity or perm.
So you're in the perm side. So we have a lot of developers on here and stuff like that. Like, can you tell us, like, we don't have a lot of folks on the financing side, not on purpose, but maybe I imagine some folks junior in their careers or just kind of understand how that all works. Kind of how do you play your role in the ecosystem? Can you describe that?
Sure. So my job is to find developers looking for debt for their affordable housing transaction. That's sort of the the gist of it. Uh, how I go about that is, I've been in this space for a long time. Me and my team are really good at what we do. Uh, when we have clients, they usually come back as repeat clients. That is on a year-over-year basis. That helps. I have production goals, but I can usually count on some meaningful percentage of that being accounted for by kind of repeat clients who are coming back. Always like to enlarge the pie. And so, I go to conferences. I particularly tend to focus in the preservation space. So in affordable housing, there's building new and then there's preserving what's existing. And the preservation side tends to have a lot of Section 8, kind of old, HUD grants on there, kind of weird rules and regulations. And I really decided I was going to focus on that space around 2000. And so really, I've been in that space in particular for a long time. And so, I go to affordable housing conferences, but then there's these subset of kind of preservation focused conferences and talk to developers. My pitch is that deal that you are doing. I've done a similar version of that, 15 times at this point in my career, and we can get it done kind of issue free, fairly quickly, if you work with our team. And so, the key is to convince them that, convince a developer that, what you're talking about. They'll send you their deal model. We'll size it up. We'll give them a variety of options. We are Fannie, Freddie, FHA. We also have a private placement, which is a construction-to-perm product. But most of our work is in Fannie, Freddie, FHA. So we'll show them a variety of options. If they, they like it, like, hey, that looks good. Let's narrow it down to these two. Collect more information. We then submit a pre-screen or like a transaction summary to Fannie or Freddie or to HUD and, get back like a more formal quote, like, yes, we want to do your deal. These are the terms under which we'll do it, blah, blah, blah. And then from there, borrower likes it, we'll go to application and then we plug in the underwriting team. We get on these due diligence calls. we go full steam ahead to get it closed. And depending on what kind of transaction it is, if it's a HUD transaction with a Section 8 contract and that's getting marked up to market, at the moment that's a 4 to 6 month process. So we can get our stuff done much faster than HUD will get their stuff done. So sometimes the borrower asks us to wait. Let's give it 30 days. Let's get the application into HUD, and then we'll go full steam ahead, or we'll just get our stuff going. We'll get our commitment done. Depending on which capital source we go with, we can rate lock the transaction fairly early on, and borrowers like that kind of take some of the risk off the table, and then we sort of wait for HUD to, kind of deliver what they need to deliver, and if it's a tax credit deal, there's a tax exempt bond component. Usually we get there, first just because our process is quicker, and then the others come together and we get to a closing and go from there.
Wow. Okay. And so you have to know about different programs and different investment strategies, and in the affordable space, there's so much legalese and intricacies and stuff.
It's a vegetable soup is what they call it. It just everything's got its own terminology, and most things have 2 or 3 ways to describe the same thing we're just trying to keep the non-believers out of the space. That's the
Yeah. Oh,
goal.
yeah. They're doing a great job. What, I guess, how did you get into this role? Like, you grew up, you went to college. I mean, I can go through your background, but did you have an interest in finance? Did you have an interest in affordable housing? Do you even know what it was before you got into it? And kind of how did you get into it?
So I don't know why, but I was very interested in economic development as a college kid. So I went to Georgetown. They have the School of Foreign Service, and then within there are particular majors you can follow. And my major was international economic development.
That's pretty
I
cool.
thought I thought I was going to go work for the World Bank or the IMF. I grew up in DC. That just figured the world revolved around DC. I don't feel that way anymore, but uh just, figured World Bank seemed like a cool place. A few people who worked there. And so when I graduated, I went to business school, and there were a couple of programs. I wanted to move to Chicago. For some reason, I fell in love with Chicago. There were a bunch of programs. There were 2 different banks out there that you go interview with them. They'd say, yeah, you look like a serious candidate. You then have to go get into business school, which is really hard, a year out of college, just because, they want older people. Then if you get into B school, you go back to the bank, and you go through like a full day of interviews, and 97% of those kids get the jobs. And I'm the part of the 3% that didn't get the job. So I went, and they said, "You look like a serious candidate." I got into business school, which should have been the harder part of the equation. And then I went, had this day-long interview, and they asked me, "Where do you see yourself in 5 years?" And I was stupid and 100% honest. And I said, "Well, I wanna get my MBA, I wanna learn about finance, and then I'm gonna go back to DC, and I wanna work for the World Bank," which to me was like a really unique, like, they probably hadn't heard that from somebody before, and it would separate me from all the other
Very
guys.
interesting.
Yeah, what I didn't appreciate was when they're paying for my MBA and they're paying to train me, even if they probably know you won't be there in 5 years, you should tell them you wanna be there for 50 years. So both of those banks rejected me, as they probably should have, and I sort of found my way. I needed a job, and it took me a couple of years, but I ultimately got a job working for a nonprofit on the west side of Chicago.
Oh, cool.
One of the things we did was package loan applications for companies on the west side that were looking for new machinery, maybe buying a building. And I got sent to this lending school to learn a couple of things, and was packaging up these loans, and decided I really liked that. And I met a few people at the banks, and then yeah, an opportunity came up to jump from the nonprofit to LaSalle Bank, and I came in as essentially the portfolio manager. So I did reviews of every loan that was on their books, which took me to every corner of Chicago and made me absolutely fall in love with Chicago. And then I decided, it's like, if I ever figure out, like, if I ever develop like a skill set in this industry, like, I want to be able to show my mom, like, hey, I made that happen. I made that happen. And so my focus shifted from international development to as I sort of fell more in love with Chicago and sort of saw how you could really make a difference in a neighborhood. I sort of lost my appeal or interest in international development and sort of went all in for community development at LaSalle Bank in Chicago. And then, that started taking me to other cities to do deals. And then when I ultimately moved back to DC, I came back with Bank of America. And, I do it regionally and, kind of all over the country is where I end up. Because again, my clients do these preservation deals and they're complicated, but once you figure out how to unlock value on these transactions, a deal that you figured out in Maryland, you can unlock the same value in Illinois or Nevada or whatever. So early in my career, I had clients in the early days of preservation when there weren't developers in that space where they were buying deals all over the country because they're like, we know how to make that deal work. And they wanted me to follow them. And so I would just end up, in 5 or 6 different states doing the same kind of deal, but in a different market as they kind of figured out the best ways to unlock value and make that a great new asset.
So what skill set do you need or have in order to be good at your job?
Good question. I think
Nice.
early in your career, you need to be fearless, right? You got to go to these conferences and you got to stick out your hand and introduce yourself to people and, try to get connected and meet people. But they also need to take you seriously. So you need to have the skills to back it up. So I was fortunate, I think, when I was coming up in the industry, there really wasn't this split between originations and underwriting until maybe 2000, 2002. I would find my deals. I would underwrite my deals. I would take them to committee. I would asset manage them afterwards. I mean, I wouldn't do the construction draws, but I had to sign off on the construction draws. So I knew every aspect of the deal. I don't know how you get that skill set, but it was a truly invaluable skill set because I could talk to the development people and I could talk to their, construction managers and I could talk to the asset managers and I could also talk to the big picture people because I really knew all the elements of the job. I think that's invaluable. I don't entirely know how that happens in a world that's a little more regimented today, where you're kind of on one side or the other. I've got a guy who works for me who's great. He came up on the underwriting side. He's been with me for 7 years. He was on the underwriting side for 8 or 9. And I feel like that's the skill set I had as well. And so he's great. And that's a great way to do it. But, obviously comfort with Excel, kind of understanding again, if you're in the preservation space, understanding how these programs work, so you don't ask a lot of dumb questions. Kind of fearlessness once you feel like you've got the ingredients to be good at this, to go out and, market yourself and then be able to deliver.
Yeah.
And I think those are kind of the key components.
What do you see happening in the on the preservation space? Like what's happening in the market right now? Where do you see it going? I have a lot of clients that are in that world.
Yeah. I would say, I've been doing it for a long time. It has gotten increasingly crowded. And also the value of Section 8 assets, is fully appreciated. When we were I did a Section 8 deal in 2001 in Maryland, and Fannie Mae didn't know anything about Section 8. Nobody did. Really knew, or they were scared of it. They're like, I'm not sure we want to get into that space. I mean, now when you look at the Fannie and Freddie's, production goals, it's the deeply affordable stuff that is the most full, and that's all Section 8. And they go after those deals so aggressively. But in the early days, there weren't a lot of developers chasing it. The financing agencies, every time you had to talk them through what it meant and what the risks were and where the risks weren't, right? Like how much safer this was than a new construction deal where you had to bring 250 families into a property rather than renovating around tenants and getting the higher rents on day one and all that stuff. So, it's definitely more crowded from a developer perspective. It's also really competitive. And so, Fannie and Freddie are so hungry for these deals, they'll chase for 2 or 3 basis points. Will kind of swing the difference. And so from where I sit, you really need to know not just what their appetite is, but the agency's appetites tend to vary over the course of the year. They tend to be hungrier in the first of the year because they're like, oh, damn, we've got big goals. Let's get a jump on it. And then, if they're at 70% of their goal by May, maybe their appetite backs up a little bit for this deeply affordable stuff. And then toward the end of the year, they want to chase it more because those are deals you're going to sign up in the fourth quarter, but probably close the following year. And so you sort of got to know, like, when's a really good time to bring them. I mean, sometimes deals just show up when they show up, and you got to advocate and push for them as best you can. But sometimes on these discretionary refis, you sort of know there's a better window than others to be pushing it one direction or the other. But it's just, I would say, yeah. So the space it's crowded. There's a lot of people who are coming in and doing the right thing, buying it, doing a $20,000 a unit rehab if it's not a tax credit deal. If you're doing tax credit deals, it's usually 80 to 150 for these preservation deals because they're older. And then you also have, I think a handful of folks who just see it as a coupon, like where to park money. So they're going to buy it. They're going to put 5,000 into it, and it probably needs more. Those are, so you see our clients getting outbid by people who are not really going to do
The right thing. Yeah.
right by the property. So it's a very attractive space for a variety of reasons. And so, but part of that too is that, I think you get developers who basically look at it as like uh, a treasury purchase
Is there any
with
way to like
vision.
guard against that, or regulations that they should put in, or anything that should guard against those type of investors?
Not really. I mean, if you're not on the HUD bad boy list, and you've got a decent reputation, they'll assign the HAP to the new owner. If you're a problematic owner, you've got flags on other deals, it's possible HUD might ask some questions, but it's rare that HUD says, "No, we're not going to transfer it." So that would be, I think, kind of the most meaningful, but you rarely see that. Then the question is whether or not the lenders want to do that deal. And as I was saying, the agencies are hungry for anything that's Section 8. So if you can make a reasonable case, if you get the PNA and it says it needs $7,000, again, most of my clients are doing 25 to 50, even if it says it needs 7. But there are a handful that are doing, 7. And that's going to bridge you for 5 years. But in year 6, even probably sooner, it's going to have more need.
Gotcha. Well, Alex, I know it's cold in DC, or colder than where I am in DC, but you're in luck because you just sat on the hot seat. Kind of nice. Like maybe it's the warm seat.
Okay, I'll take it.
The hot cocoa. Do you have a favorite book or podcast? I'm always looking for new books and podcasts.
So my wife is deep into podcasts, and I am sparsely into them. Shame on me, and everybody tells it's a great way to spend time. I tend to listen to music when I'm a big cyclist, and I've tried podcasts and it doesn't quite work for me. I need a song to help me get up the hill. I'm not really a podcast guy, but books, I don't know. I mean, I just finished the Hamilton book.
Okay.
And it was interesting. I felt like it could have been, 1,000 pages shorter. But in terms of like books that stick with me, I read a lot of fiction because I say, my life is nonfiction, and spend a lot of time in front of a computer. So I like to read fiction. But I just, like, in the last year, read that book Team of Rivals, which it's sort of a corny answer, but I did read it in the last year, and I was like,
It's good.
"Wait, really?" Yeah. And just like the lessons, right? Like, don't take a bunch of people who agree with you. You end up, well, whatever. You get more diversity of thought and ideas and creativity with people who don't always agree with you, and you usually come up with better solutions.
It makes sense. It's just a pain in the butt. So I'm sure you've hired a lot of people, so you have a team underneath you. Like, what do you look for when you're hiring someone?
We look at a lot of deals in any given year. I mean, our hit rate's pretty good, but we look at a ton. And so, I'm looking for people who very, comfortable, proficient at Excel. If they're new people, I want people who are going to ask me a lot of questions, and then also, you know, digest the answer and it sticks with them. So they don't ask me the same question 6 or 7 times. So, when you're interviewing, I've got my handful of questions but I actually lean heavier on like, what do you have for me? And they come back with, something silly. We're just something that clearly haven't thought about it or anticipated that. That's probably not going to be a good fit. So I do look for people, who are comfortable asking questions. And I have the feeling that they're going to sort of stick with the answer and get it and process it and move on. And self-starters, we're looking in try to look, especially if they're young, you try to see, did they play organized sports? It's a it's a bit of a shortcut, but you're
Right.
like,
Yeah, for sure.
you commit to something, especially something like the people that impress me, the guys who get up at 5 in the morning and swim, like everything about that sounds miserable to me.
Yes.
You did that for a couple of years, you did it in college even, like,
Yeah,
that's
this will
that
be easy. Yeah, your job will be
yeah,
easy if we're doing that. Yeah.
exactly. So I think there's a variety of things. If I'm hiring for, kind of a more senior role, just somebody who doesn't need a lot of direction, right? They've been in this space, they know what they're doing, they kind of know what we're trying to achieve, and I feel fairly try to get references from people. I mean, again, one of the benefits of being in the industry a long time is I just know people throughout. We've crossed paths forever ago, but I can just sort of check and see if this is a sort of freestanding, self-supporting person or whether they needed, a little bit of coddling. I'm not great at that, and my wife is very clear that I should probably get better at that if I wanna, hire the best, but I got a couple guys working with me now, and they've been with me for many, many years, and I feel lucky that I've got great guys who don't seem to be going anywhere.
That's awesome. Speaking of great guys, what have you sure well, we all know that we kind of don't do this alone. And like what mentors have been you want to give shout out to or call out that have helped you along your career and your life?
So when I started at LaSalle Bank, I worked for a woman named Kristen Faust, who actually now runs IDA, the state finance agency. Her passion for affordable housing was like palpable. Like when you met her, when I said like I decided I wanted to sort of transition from international to local, like I really do think that like her exuberance and enthusiasm and passion for the industry played a huge role in that because she was the first person I interviewed with in this space. I was sort of doing general economic development with this nonprofit, but when I got an interview with her, I was like, damn, like this is first of all, it just sounds cool, right? It just feels like a job. And I felt this a year after she hired me or even sooner, but like all my friends on Sunday night, they'd be like, we gotta go to work tomorrow. And like I was like, if you love what you do, like I'm not saying you're gonna like get up early and skip to work, but like if you like what you do and you feel like you're adding value, like that just sort of just gonna breed enthusiasm into what you do. And like I never ever have that Sunday night, oh damn, I gotta go to work tomorrow because I feel lucky about what I get to do. And like her exuberance was definitely like my first introduction to that. Right. If I'd interviewed with like maybe my equivalent, right? Maybe not quite as exuberant. I'm not sure I would have been so enthused and then pursued it as aggressively as I did because I think Kristen turned me down at first, and I came back for another job. But yeah, but I was like, I want to work there, and I want to work with her because whatever she's drinking, I want some of that.
That's a great. I feel the same way about my job. I never like, oh my God, it's Sunday. Like I don't, thank God. Like I've had jobs like that.
Yeah, for
In
sure.
my career, I was like, this is the worst. This is awful. I don't feel like my job. I don't really feel like I'm working.
Yeah, absolutely.
Alex, thank you for coming on the podcast and for sharing your experience and your journey here. That was great. Very informative. So I appreciate it.
Thanks for having me.
Thank you for listening to Beyond the Resume, a Jackson Lucas podcast where we take a deep dive into the career journeys of some of the top minds in real estate and equip you with the knowledge to move forward in your path towards the success you've envisioned. Make sure to like, share, and subscribe to Beyond the Resume. Be grateful for your support. All episodes of Beyond the Resume are brought to you by Jackson Lucas, building inclusive and diverse businesses through talent acquisition. Visit us at jacksonlucas.com